Welcome back everyone. This is our weekly gold review. Gold's price remained lower in the latest sessions after the significant drop in value the yellow metal performed in the previous 2 weeks. Even though gold's price on Monday started the session dropping even lower, it managed to surge higher and even stabilize during the European session. However, with the price action being muted and still remaining rather lower, gold traders are trying to figure out in what direction the next big move will be. This report aims to be short and easy to understand for gold traders. At the end, our technical analysis will complement our fundamentals in order to provide a more complete analysis. To start with, gold may be pressured to the downside from the latest strengthening of the US dollar. According to the dollar index, which monitors the greenback strength against other major currencies, the trend has been upwards. To be specific, the dollar index shows a 2 consecutive week rise for the greenback. The USD has not moved higher for 2 consecutive weekly sessions since the end of August and start of September. Analysts argue that after US President-elect Joe Biden announced a $1.9 trillion stimulus package to further support the economy, gold traders may be skeptical whether the downtrend is over or not. As we have noted in our report last week, expectations that the economy may rebound in the second half of 2021 is supported by some US Fed officials. Even though these forecasts support the notion that the economy will improve, at the moment the economy is far from levels seen prior to the pandemic. On the other hand, the new stimulus package to be brought forward soon could act as further reason for traders to believe the economy has more chances of expanding rather than contracting. Traders may be on the watch for announcements of further stimulus, even surpassing the number pre-mentioned. This view seems to be interfering with gold's price action in the short term, which has been limited and favoring the bears. Despite the economic measures set by the US, but also many governments around the world that aim to deal with the ongoing pandemic, gold's price could also be determined by how traders observe the healthcare circumstances around the world. Even though vaccination is currently carried out and an immune system is currently building up, it is very ambiguous if governments will ease lockdown measures anytime soon. Countries like the US, the UK, and Germany are still seeing increased numbers of new cases. Also in China, a new wave of cases currently being dealt with in Hebei, which is very near to Beijing. These circumstances are more suitable to support gold's price at a later stage, as the longer the effect of the lockdown measures, the more time and money will be required to support economies. Our opinion is that gold in the long term could benefit from such circumstances and even retest the all-time high levels last seen in August 2020. Yet, for the time being and from an investor's perspective, some international businesses that have the financial background to grow during the current difficult circumstances may be more attractive than the large sudden movements that gold's price usually undertakes. On a final note, some upcoming financial releases from the US could cause gold's price to react strongly to any unexpected figures. On Friday, the 22nd of January, we get the preliminary US market composite manufacturing and services figures for January in the American session. Finally, on Wednesday, the 20th of January, we get US President-elect Joe Biden inauguration, and traders could be searching for clues of further action his government could take to improve the US economy. We move now to our technical analysis. Please note this is gold's 4-hour chart. At the moment, gold is trading just on our S1 1835 support level. However, on Monday's session, as we mentioned in our fundamentals, gold dropped even lower and at some point tested our S2 1810 hurdle but quickly rebounded higher. However, if the selling persists even further, our lowest level for this report is the S3 1785 line and was last seen on the 1st of December 2020. Our resistance levels start first at the R1 1855 line that was constantly tested from the 8th to the 15th of January, but the price kept returning lower. Higher, we have also noted the R2 1875 level and even higher the R3 1900 round level that can both become targets in extensive bullish runs. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, make sure you share and subscribe. Thank you very much for your time and enjoy solid trading.